Here's the thing. Bitcoin just dropped to $87,500, and the market looks fragile. But this might be the setup everyone's waiting for. Check this out. BTC dominance is sitting at 59.4%, showing money is flowing out of altcoins and back into Bitcoin. Let's talk about what's really happening behind the scenes. Now, Bitcoin is trading around $87,500 to $89,000 right now, down about 2% in the last 24 hours. The 7-day chart shows we're down roughly 1.5% from last week. But here's what matters more. Bitcoin's market cap is holding at $1.80 trillion, and total crypto market cap sits at $3.02 trillion. Look at this. If we break below that, we could see a test of $80,700 based on the rectangle breakdown pattern. Resistance is stacked at $89,000, then $92,000, and the big one at $100,000. The RSI is sitting around 33, which is oversold territory. Typically a bullish signal when it's this low. MACD is showing bearish momentum right now, but we're approaching a potential reversal zone. Moving averages tell a different story. The 50-day MA is crossing below the 200-day, which is a death cross signal. But here's the thing. Death crosses in Bitcoin have historically been late signals, not early warnings. Technical indicators are mixed, but the oversold RSI suggests we're closer to a bottom than a top. Now let's talk about what's really moving the market. Liquidations. In the last 24 hours, $99 million in Bitcoin futures got liquidated according to CoinGlass data. Long positions took the biggest hit with $68 million wiped out, while shorts lost $31 million. This shows overleveraged bulls got flushed out, which is actually healthy for the market. Funding rates are slightly negative right now, meaning shorts are paying longs. That's a bullish setup. When funding rates flip negative after a liquidation flush, it often signals a reversal is coming. Now here's where it gets interesting. Whale activity. The exchange whale ratio hit a 10-month high in early January, showing big players are moving coins to exchanges. But wait, whales holding 1,000 to 10,000 BTC added 29,600 BTC in just 1 week. That's massive accumulation. Exchange reserves continue trending down, despite the whale ratio spike, meaning smart money is pulling coins off exchanges. This creates a supply shock. Fewer coins available to sell means less selling pressure. Let's talk ETF flows. This is where institutions are showing their hand. Bitcoin spot ETFs saw $486 million in outflows on January 22nd, led by Fidelity's FBTC with $247 million out. BlackRock's IBIT had $129 million in outflows that day, but don't panic. Here's why. IBIT still pulled in $25 billion in 2025 despite negative performance, showing long-term conviction. On January 24th, ETFs flipped to $355 million in inflows, snapping a 7-day losing streak. BlackRock's IBIT led with $143.8 million, ARK's ARKB added $109.6 million, and Fidelity brought in $78.6 million. Total ETF holdings now sit at $118.36 billion, representing 6.5% of Bitcoin's total market cap. Analysts say these flows show resilient institutional demand, not panic selling. Now let's dig into mining. This tells us about network security. Bitcoin's hash rate is around 1.04 zettahash per second, showing the network is incredibly secure. Mining difficulty is at 146.47 trillion, and it's expected to decrease by 4% on January 23rd. This is the 7th negative difficulty adjustment in the past 8 periods. Miners are under pressure. Miner profitability dropped to $38,700 per exahash in December, down 32% year over year. Some miners are selling Bitcoin to fund AI and HPC operations, adding short-term selling pressure. But here's the bullish case. When weak miners capitulate, it removes future selling pressure. On-chain metrics are showing something fascinating right now. Active addresses dropped to 660,000 on the 7-day moving average, the lowest since December 2023. But 65% of Bitcoin hasn't moved in over a year, showing long-term holders are not selling. The MVRV ratio is sitting at 1.8 to 2.0, which is neutral territory. Not overheated, not undervalued. SOPR, spent output profit ratio, is around 1.03, showing modest profit-taking but not panic. The MVRV Z-score is around 3.0, well below the overheated red zone of 7+, plenty of room to run. Exchange reserves continue declining, which historically precedes bull runs when supply gets tight. Now let's talk macro, the Fed and global liquidity. The Fed is expected to cut rates by 1/4 point in 2026, bringing rates to 3.4% by year-end. But here's the twist. The Fed's balance sheet is expanding at $50 billion per month through stealth QE. This liquidity injection typically supports risk assets like Bitcoin, even if rate cuts are slow. Inflation is at 2.5% core PCE, still above the 2% target, which is why the Fed is being cautious. Bitcoin's correlation with global M2 money supply remains strong at 0.5 since 2014. As liquidity expands, Bitcoin historically follows with a lag of about 84 days. Let's hear what the experts are saying. Michael Saylor predicts Bitcoin will hit $143,000 to $170,000 in 2026 as banks start offering BTC custody and loans. He says half of major U.S. banks have already started Bitcoin-backed lending in the past 6 months. Grayscale forecasts Bitcoin will reach a new all-time high in the first half of 2026, driven by institutional adoption. Standard Chartered cut their 2026 target from $300,000 to $150,000, but that's still bullish from here. Now here's the outlook. Where is Bitcoin headed next? The setup is clear. Oversold RSI, negative funding rates, whale accumulation, and ETF inflows returning. If we hold $85,200 support, the path to $92,000 and then $100,000 opens up in Q1 2026. A break below $85,000 could test $80,700, but long-term holders are unlikely to sell at these levels. Institutional adoption through ETFs and corporate treasuries is absorbing 100% of new Bitcoin supply. The Fed's liquidity expansion and potential rate cuts create a tailwind for risk assets. Mining capitulation is clearing out weak hands, setting up for a healthier rally. This video is for educational purposes only, not financial advice. Always do your own research. If you found this breakdown valuable, smash that like button and subscribe for daily Bitcoin analysis. Drop a comment below. Are you buying this dip or waiting for lower prices? Let's see what happens next. Bitcoin never sleeps and neither do we.